right, thank you. And we need to also remind you that eTruck Biz is not endorsed, sponsored, approved, or otherwise affiliated with FedEx Corporation. We here at eTruck Biz, we want to let you know that our team is here to help you organize administrative functions, optimize your productivity and efficiency, and maximize your financial results. So you can probably own, build, and grow your FedEx-based transportation company. So everybody wants to know about the volume trends. Let's look at the pickups. Oh, look at that. The stops, actually, the pickup stops on the vans were actually up versus the previous week. That's a little bit of a surprise. And then the packages on the vans down a little bit, but they're still way on up there. Still way above trend. And on the delivery side, this is very different than last year. So the delivery stops last year, a week ago last year, the delivery stops actually started dropping back. This year, they picked up a little bit week over week. And the packages still remain strong. So there's still a lot of activity out there. So if you look at the productivity associated with all that, the routes dispatched, look at that, came down a little bit. That's pretty good. And that results in another record as far as stops per dispatch. Fantastic. Good job. And that's way, way above where we were at for the year. So there you go.
I think we peaked at 118 last year, so that's 3 stops per driver higher this year than last. That's fantastic.
Really good job, folks. All right, we're going to again look at peak last year, where we were at, and then see how we went up there and then came back pretty quick. This year it's on up there. And one of the things we want to let you know, we want to try to emphasize is that it doesn't look like we're going to come back as far as we were last year. So those of you that have been around a long time know that usually at peak, you get a peak, but you don't usually fall back as far as you were before peak. Now you'll get your January dip, but after that you should be in a stronger position than you were to start with. So keep that in mind. All right, in the news, there's a couple things here. So a lot of folks like to tell us they report on places, hubs, or whatever that get behind at peak or anything like that. The only thing we found so far is Northeast Ohio businesses, Christmas shoppers, frustrated with FedEx delays. However, we haven't heard of any hubs or anything that are behind. If you guys know, or if any of you are in the audience here and you know of anything out there, let us know. But it looks like the system's handling it pretty well this year. Now, earlier this month, last week or so, FedEx UPS 2025 fee hikes will wallop bulky package shippers. So we're bringing this up because let's just read this. Both FedEx and UPS have effectively doubled delivery surcharges for packages considered large or oversized in the past 5 years, according to whoever they interviewed. That pricing pressure will continue under the carrier's upcoming rate increases. So most of you know FedEx, UPS usually take rate increases every year, and they're going to begin January 6th with some new rates. But here's the thing about this. If you look at what they're really raising the rates on, they're raising them everywhere. But one of the things is something called an additional handling charge. If you take a look at Zone 2 additional handling, Zone 3 and 4s, that's a pretty hefty increase on large packages, or additional handling if they determine something that you're shipping needs additional handling. But the real shocker is large and oversized packages. $240 for some sort of surcharge for something that they deem large and oversized. Is that right, Ken? Is that what that means?
That's what it appears to mean, but that seems really, really high.
Well, if it is, even if it's this, I don't want to start anything, but there's where you'd have a beef, not necessarily in other ways, but trying to participate in this large package increase would be very interesting. Okay. The other thing that's happening on Thursday, I think it's Thursday, earnings preview, FedEx Q2. So remember, this is their fiscal second quarter. Earnings are expected to decline. Wall Street expects a year-over-year decline in earnings on lower revenues when FedEx reports for the quarter ended November 2024. So that's going to again take place after the bell on Wall Street on Tuesday, or on Thursday, I'm sorry, on Thursday. Now, if earnings stink, of course, questions will be raised as to why they stink. Depending on the results, the future direction of many things is about to be determined. So first of all, many are looking for the fate of what will become of FedEx Freight. So it might be, the whole thing might be overshadowed with whatever happens with freight. They've been talking about spinning it off, selling it, who knows, whatever. But if something that the street likes happens with freight, the stock price might react favorably. And maybe they're doing something with that as a possible short-term solution to boost the stock price. I don't know, but maybe they could. I guess it's possible. For us, the pace of Network 2.0 integration could be quickened if earnings are worse than expected. So 2.5 years ago, FedEx announced Network 2.0, the Drive Initiative, all those different programs as ways to cut costs. The stock price reacted favorably, and for this whole time, that's what shareholders have been expecting. They've been expecting to see margins for sure, or net income increase. That's what they bought when they bought the stock a couple years ago. So if the earnings disappoint, Wall Street will be looking for answers about the Network 2.0 integration delays. And we don't mind telling you, they're probably about a year and a half behind on the integration of Express into the ground network. If things are bad for earnings, there may be tremendous pressure brought about by the investment community to produce results. And that's no joke. That will definitely happen. That they are expecting some positive results. Actually, what may end up happening is FedEx may be forced to increase the pace of Network 2.0 initiatives before Wall Street loses its patience. So what does that mean for individual service providers? Well, there's good news and there's bad news. The good news is, as Express comes over, that increases your volume. That's a good thing, because that increases your revenue. That's good. That's going to grow your businesses. That's a very good thing. It'll decrease your costs per stop from increased density, right? So as that volume comes over, I just put more packages on each dispatch, and your cost per stop should decrease from that. And then utilization of current unused capacity, fuller utilization of current resources. So that's not necessarily a thing right now in the middle of peak, but prior to peak, there was a lot of unused capacity, and that's what that Express volume would be taking over, or would be filling in, is that unused capacity. Now, the bad news, the increased number of dispatches to accommodate time-definite services. So a lot of folks are contemplating adding a lot of different trucks, and in some of the projections from FedEx, yes, it is true that they do show some additional dispatches. That's going to cost more, right? Potentially lower stops per dispatch. So as you have to deal with the time definite stops, that actually hurts your productivity. So that would wind up being potentially lower stops per dispatch. And then the density increase, and this is important, the density increase could spur lower negotiated stop and package charges. Now, we've already seen that for the last several years, where if FedEx thinks your area is growing or your density is increasing, a lot of times they'll offer you a little bit less per stop, a little bit less per package, saying that, well, your costs are going down, so we're going to offer you less per stop and package. That could happen. And then this is the most important thing of all. No matter what happens, you're going to have to deal with lower per stop margins. And that means a lot of things. That means an increased focus on what we're about to talk about. There's a lot of things here. This will fundamentally change the financial revenue and expense model for service providers. We've already seen it. It's happening. In fact, this is such a broad topic. We'll be digging into it over the next 6 months to a year. So as things have been happening, as things have been changing for folks, we've seen the financial picture change in a big way. So fortunately, we've already seen the effects on many operations that already have express volume. It has provided the opportunity for increased net operating incomes for those that can capitalize on the move. So if you can manage the change, and it's not just, there's a lot, and people say, well, I got to put more trucks on the road. The way I have to deal with the folks changes, that's correct. But you also have to understand the economics of the dispatches now are very different. If you can capitalize that, we have a lot of clients that are killing it. Some struggle a little bit more, but some are doing very well. We have developed 2 new financial tools to help prepare for and capitalize on our Network 2.0 integration solution. The first is something we call the operating budget and financial plan. So this analysis uses your data to create a standard budget, which shows what FedEx thinks you should be spending based on your latest negotiated charges. Okay, it does a lot of things, but that's the primary thing. So you go through this evaluation. I'm not going to go through this right now. We'll go through it later. But we do a very extensive analysis. We look at something we call your standard budget, and then come up with a standard and an expense plan. And then there's a bunch of other things you look at as far as maybe your business value, what some of the benefits to doing this is, what some of the pitfalls are. This plan produces your easy number, which is your guide to achieving your planned owner's benefit, right? There has to be some sort of rhyme or reason to it. There has to be a number you're trying to hit every day. If you hit that number, you'll hit your planned owner's benefit or your planned productivity. Analysis also establishes your baseline financials, and this is very important, so you can plan and move into your optimized 2.0 negotiation. So you would do this before you even get to Network 2.0, right? Or you would do this in conjunction with a regular traditional negotiation once you're faced with it, with the one coming up. So you would do your negotiation, you would go through this this analysis, and it would tell you a lot about that negotiation for one, but give you a bunch of guidelines of what you want to try to achieve, right? The second thing is when you finally are faced with moving into Network 2.0, you'll be negotiating an optimized CSA, as it's called. This helps aid in understanding the new dynamic components that make up the new service provider financial model. Okay, it's different. It's different than it used to be. Same thing here. We go through an exercise showing different package assumptions, stops assumptions from FedEx, which is very different than your current negotiation. They actually show you how many dispatches they anticipate you to make. They give you package numbers, stops per dispatch numbers, all kinds of different things they don't do for regular negotiations. but we go through this particular analysis and look at all the different things that happened during this situation. This is essential to analyze and optimize CSA and conduct a successful Network 2.0 contract negotiation. Folks, they're different. They're different. And those of you that have been through it know. And then, of course, this analysis allows you to hit the ground running with a solid financial plan for success in Network 2.0. So if the earnings Thursday wind up being bad, the rumor is out there, we just said this, but they're going to accelerate Network 2.0 because guess what? They're getting to the point where that's about all they can do. These plans, along with our new business support system, are how CSPs are succeeding with Network 2.0. And like I said, there are some folks that are doing very, very well. Until the end of the year, you can get these reports and analyses for free. How do you do that? You book an appointment to see the BSS, the business support system with Becca. So people say, well, what's the business support system? Business support system is for service providers transitioning to Network 2.0, service providers expanding their operations to multiple facilities, and many of you are facing that right now. Service providers new to the business and service providers who operate operations remotely. In the system, there's the Administrative Services Manager program, which helps you manage your time effectively. The Optimized Performance program, which helps you maximize your efficiency, and then the Expense Management program that helps you control costs. There's payroll, HR, benefits, recruiting, finance, all kinds of different things to help you run your businesses. In those packages, you can do those all in one place. So if you want to make an appointment to see all those things and get the reports we just discussed, which are huge as you approach Network 2.0, you want to make an appointment with Becca, and you can do that by emailing Becca or going to that particular page and getting on her calendar. So, don't know if there's any questions, but fire away.
We have one in the chat. It looks like it says the money talking about the surcharges not being passed on. I think that has definitely been true in the past. It's definitely something that you want to continue to talk with service provider support group because it is a concern when a vehicle can't go out and produce the number of stops needed to get the revenue per dispatch you need, then something has got to change. And as we showed, they are making significant amount of money on those packages. Does it cost them more to handle those packages? Absolutely, it does. But at the same time, it costs you more to handle those packages as well. So you need to be on the receiving end of that. At the same time, you don't want to totally throw your contract into a tizzy just to get more settlement on 7, 8, 9% of your stops. You always want to improve your contract based on the 90% of your stops. And we see people do this sometimes with peak, with surge pay, where they say, I don't want that $1.50 a surge, I want $2. Well, that's great. You're going to lose money for 48 weeks and make money on 4 weeks. So that's where you got to be very careful with it. But it is still something that does need brought up because large packages are difficult to handle. Sometimes we overreact and put on trucks that we don't need because we still fear that the driver has to walk through that entire truck, which they don't have to do. But so far, 121 stops per dispatch. Last week, fantastic. We did have some great performances again, with several of our customers averaging over 200 stops per week. So that's a fantastic effort. And I think we've got one of our customers got a driver with 324 stops on them today. So we're going to see how that person operates. Are there any other questions out there? But I think it's one more chance for the people to buy and for the hubs to push that volume through. So I think you'll see volume stay strong, and I think you'll have a big weekend next weekend. As Jeff said, we don't know of any hubs in trouble. There are some satellites that are just running, they're rolling loads each day, trying to run the same amount of volume. And I think we've got one of those in Northeast Ohio. What a friend called me about a package that they were looking for. So, but the volume should stay steady. Stay diligent. Keep an eye on your hours of service. But you know what? It's a great time to make money. So make some money. So with that, we'll let you know what we're going to do next Tuesday on Christmas Eve. If we don't talk to you before then, please have a safe and profitable week. And if we don't talk to you on next Tuesday, please have a wonderful Christmas and holiday season. Thank you very much.